the dollar, it's actually been in a 50-year downtrend, and people don't realize that. Ever since 1971, the dollar has just gone down, not straight down, but down, quite a steep downtrend. Now it's rolled over and it's breaking down again, and we think it'll break down to new lows. One thing is the economic uncertainty that's COVID related, and the COVID uncertainty. How long is that going to last? How will it affect jobs, and how's it going to affect my life? And, how long are we going to be cooped up, and, all that. And like Pam said, and I think that's true, eventually we'll get back to normal. It might be a new normal, but, things will settle down. But then if on top of that, you have election uncertainty and uproar over the results, or, chaos, protests and all that, that's just going to compound the uncertainty. And I think that could not only make the markets volatile, but it could push stocks way, way down. It could shoot gold way up. There's so many things that, depending on the outcome and what happens here just in the next 6 months or so, that we think are going to be, they could sharply move the markets. And you compare it to the last two big bull markets that gold has had, which was in the 70s and then in the 2000s. I mean, you're talking many thousands of dollars for the ultimate high in this bull market, and it could take several more years.
Yeah, we're thinking even up to 5 years for the full bull market to develop, like mid-2025, around there. And that's not saying that we're not going to have some nice, good-sized downward corrections, but I would look at those corrections as a good buying area, not to be scared by them.
The manipulators are always going to be trying to manipulate, and they can only do it for so long or do so much before the major trend takes over and drives the price wherever it's going.
For the first time, the mega trend, that's not just a major trend, is turning in gold's favor. And it has a lot of room to go. And it means that gold's going to outperform the stock market and the bond market.
For years.
And this is like a mega trend.
Welcome back to Liberty and Finance. We have returning guests, Pamela and Mary Anne Aden, founders of the Aden Forecast, who've been following the financial markets daily since the 1970s and who founded the Aden Forecast since 1981, publishing it for viewers all over the world, and subscribers are here with us again. Pamela and Mary Anne, thanks for joining us again here on Liberty and Finance.
Oh, thank you. It's a great pleasure.
Thank you.
I'm Dunnigan Kaiser, and this is my wife,
Melody Kaiser.
And we've got quite a few questions that have been submitted by viewers ahead of your arrival here. The depth of your experience and context that you bring to these turbulent times is highly appreciated by our viewers, because a lot of us are seeing turmoil of these types maybe for the first time. Some of us have been through some upsets in the past, from the dot-com collapse to the 2009 global financial crisis, whatever, but still there's patterns that you two have been watching and are recognizing that are repeating themselves, or at least rhyming with the past enough that it gives you perspective. One of the biggest concerns at this time that people are having, besides we'll talk about the debt and other things, is that we're heading into an election year in the U.S., and the last time that was highly contested, we've already seen quite a few demonstrations and civil unrest and that sort of thing this time. And there's a question from a viewer, Charm, who asks, will the election aftermath roil the markets? So could you talk to us briefly about what you're expecting, both at a high level and then also how it's likely to impact the markets heading into and navigating through this highly contentious election season?
Yeah, it's been like no other. I think one thing we can expect is volatility. And we've been getting it, and we think that's one thing people have to be used to seeing. It doesn't mean a trend change. It might mean a short-term and pretty deep or movements. Same when we're talking about the stock market and the gold market. We're talking about all the markets, really, but those two are the most. And so I think that people have to realize that volatility is here to stay. And even after the election, and probably into next year, we could continue seeing it. And as long as everyone feels uncertain, and there's no certainty in the COVID, we're going to see uncertainty in the markets. And we're going to see it moved by the Fed, what it does, what the other central banks do. And we're going to see what the dollar has fallen like almost 10% since the March peak. So that's been an influence. And all the markets, you can say all the market, including the stock market, has risen and with an aid of a weaker U.S. dollar. And people tend to not see that. And that's an important factor, too. Not the factor, but an important factor.
As long as you're talking about the dollar, I just wanted to piggyback onto that because we've interviewed Alistair McLeod from goldmoney.com, and he's really concerned about the potential for a systemic banking crisis and or even a fiat currency crisis even yet this year. And he's seeing potential like early runs on the banks in Turkey or different things like that are starting, besides the evaluation, the book to price to book ratios for some European banks looking quite as though banks are distrusting each other and the markets are distrusting the banks. So I guess as long as you're talking about a weaker dollar, could you talk to us about what your view is of the strength of the currency, or whether you think it's also at a significant risk right now?
Yes, we do. We think the dollar, it's actually been in a 50-year downtrend, and people don't realize that. Ever since 1971, the dollar has just gone down, not straight down, but down, quite a steep downtrend. But it's versus the other currencies, the major currencies. But now it's within that downtrend. It's had up moves as it had in recent years. It had a good sized up move. Now it's rolled over and it's breaking down again. And we think it'll break down to new lows. And this is coinciding with what you said, this kind of distrust in general, where central banks have been easing out of dollars and buying more gold for their reserves. And so we've seen that for about the past 4 years or so. And so it's kind of like at first we were thinking, what are they up? Wonder what they know that we don't know. And
now they know what we know.
But it's like, anyway, I think they see the writing on the wall, and several of the central banks have come right out and said they don't really want the dollar to have that dominant role it's had for many years, decades, but they're nobody wants to crash anything. Like they don't want to see the dollar crash down. They don't want to see their currencies go soaring up. So it's been sort of a gradual thing, but it is happening. And these things don't always seem to take a lot longer than you think.
Okay, we have a question on a different topic, but I don't know, it might affect the dollar too because we're printing so much. Christopher asks, with 54 million Americans out of work and 30% of small businesses never to open again, it would seem that real estate prices would collapse because of so massive of a foreclosure event coming. What do you see ahead in that aspect?
Well, that is definitely horrible, and it will affect the market. And in fact, what's interesting so far, and then we're just really at the start of this, is the people moving from the big cities, namely New York, and seeing that they can live in a remote area, working remote, like outside of the expensive downtown cities. And so we see that being a change, and the suburbs are starting to rise in price because of the demand for the people leaving the cities. So that's kind of happening. And if they stay remote working, what's going to happen to all the office buildings? Like those are all things to be seen. Those are to be seen. We don't know how all that's going to turn out.
But it seems that there is a shift. We have friends that are that deal with luxury real estate in the United States and globally as well, and they have seen a big pickup in their business. For example, Aspen has seen a booming real estate market, and a lot of the people that are buying there are what Pam just said, New Yorkers leaving New York that can afford to get another place or live remotely and work, from home. And it doesn't matter where home is. So, there's a lot of big changes happening, and we still don't know the final outcome of all this and how it'll affect people, of course, the rich can always go buy another place. The people that are unemployed, what's going to happen to them? I mean, right now I think there's a freeze on being evicted
Right, you
from
can't,
the
yes, a
apartment.
moratorium.
Foreclosures and evictions, yeah.
But at some point, they're going to have to lift that, and it's really sad. And the economic repercussions of all that are still to be seen.
But with the way they're printing money and giving money away, or lending money that will never be repaid, probably, it needs to be done now to help everybody, granted. But it's to be seen how that will affect the economy after the whole thing is starting to be contained. It's going to have a backlash, probably inflation, and
Or stagflation.
yeah, but just as bad.
Yeah.
That's probably what it's going to be, is inflation of some sort.
That leads right into the next question by Christopher Barnes about this topic. Will the real estate bubble pop before the real inflation rate gets so high and real prices counter the price collapse in housing? It seems that the real estate is still going up at this time. I am waiting for the collapse in order to purchase a retirement home and agricultural property. Am I wrong to wait?
Good question.
Actually, I feel the same way. Wait, because that's what your gut feel is to wait. And so it depends on what you're waiting for. Like agriculture, maybe some of these people want to have more farmland, because we're also seeing a move as with everybody in enclosed. Do I really want to be in a high rise and I'm enclosed? I have no green areas to move around in. Like, people are feeling a little claustrophobic and afraid to live in a high rise anymore. So maybe that, like we said, that depends on the real estate. Well, but I think eventually, yes, I think we're going to get a better deal. If you're looking for a good deal, be looking for it and have your eye on it and see if you can get a better. I know some real estate here has come down, but on the other hand, there's people wanting to come here as soon as the restrictions are lifted. They want to come. They want to relocate, just like they want to relocate to other places. We're getting that already here.
Right. And I was just going to add, it might be that we see different sectors. Maybe certain sectors of the real estate market boom while others are collapsing. And those that are collapsing will end up a couple years down the road be the good deals that you want to go in for if you're looking to speculate in real estate or as an investment.
Yeah, I think the millennials have a lot of opportunity ahead for that we're looking over the 30-year period that they have in their life, 40-year period of good life ahead, because this will pass, and it will pass at one point. Life will start going back to normal at one point. What that point is to be seen when, but it's not going to last, probably, I'm guessing, to say it's going to last 5 years, maybe that's the long side, but it's going to be in their lifetime still a good life ahead.
Right.
And we always tell our young people that, and take advantage of this moment, because it's never going to happen again. Oh, we don't think it's going to happen again. but it is a unique time period and an unusual one, and especially for them just coming into life as a professional adult, is to see, wow, this is crazy. And
all the uncertainty and all that goes with it. And so,
but they're also the tech people, you were saying.
Right. But kind of circling back to your first question about the election and all that, like, one thing is the economic uncertainty that's COVID related, and the COVID uncertainty. How long is that going to last? How will it affect jobs, and how's it going to affect my life? And, how long are we going to be cooped up, and, all that. And like Pam said, and I think that's true, eventually we'll get back to normal. It might be a new normal, but, things will settle down. But then if on top of that you have election uncertainty and uproar over the results, or, chaos, protests and all that, that's just going to compound the uncertainty. And I think that could not only make the markets volatile, but it could push stocks way, way down. It could shoot gold way up. There's so many things that, depending on the outcome and what happens here just in the next 6 months or so, that we think are going to be, they could sharply move the markets.
Normally, election year is good for the stock market, because everyone wants to be positive with the economy and that's what Donald Trump is trying to show. But if there was any kind of mishap, if there isn't a mishap from here to November, we could see this record high keep going. that's hitting right this moment. And but not to say it's going to be sustained right today, but if we can still see a lot of growth in the stock market in certain sectors, especially, and we may through November, depending on all the uncertainty that's growing, and then from now to November, there's a lot. Say something's exposed or something goes wrong, of course it would fall. So that's where the volatility and the uncertainty is coming in loud and clear.
Okay. We had some questions now on gold and silver. What is your 1 year price outlook on gold and silver? What are you kind of thinking maybe even longer term than 1 year?
We think the major trend is up, and it's been up since 2015, but it was quiet and it was growing, and that's when all the central bankers, in fact, were buying, and throughout since then. But see, last year, and actually the end of 2018, it started a steeper rise. So that steeper rise was already telling us something, even before the pandemic. So people think it's only the pandemic that caused the rise. It's not.
Yeah.
That's, I think, an important thing to realize. I think the debt structure and all the things that were behind were there and causing a problem already without the pandemic. And then when the pandemic came, then it shot up and had the incredible breakout. But it already was breaking out. It had already confirmed a bull market this past year. So we think that bull market is just being exasperated into higher levels right now. And because of the uncertainty, the falling dollar, the central banks, the whole thing, and the debt and all that, and the uncertainty of more stimulus and how much.
If you just take all those factors alone, this makes this bull market very unique compared to previous bull markets. And if you just say, okay, we have a chart that shows this, but if you just compare right now, the bull market Pam was just describing started off slowly, and you compare it to the last two big bull markets that gold has had, which was in the 70s and then in the 2000s. Those bull markets rose. Well, the one in the 70s was unusual because the price had been held down for so long. So gold rose like 2,300% from bottom to top. But that was because it had been suppressed so long. The next bull market that started in 2001, that one went up about 660, wasn't it? 660%. So either way, even if we say, okay, maybe this one will be like that last one that was a smaller bull market, I mean, you're talking many thousands of dollars for the ultimate high in this bull market, and it could take several more years.
Yeah, we're thinking even up to 5 years for the full bull market to develop, like mid-2025, around there. And that's not saying that we're not going to have some nice, good-sized downward corrections, but I would look at those corrections as a good buying area, not to be scared by them. And if it goes down $100, $200, like this year, say, for example, say it gets down to $1,600, $1,700 after it's been hitting 2,000, people are going to go, oh, this is it. This is terrible. It's really not terrible. Those numbers aren't terrible right now.
No.
And that's what we'd like to stress. Even though it's unnerving because it's falling, that would be fast, but it's not bad. It's not bad.
It reminds me when we interviewed Rick Rule, he said the gold bull is intact. Don't get thrown off of it. You know, there can be a lot of bucking along the way. Yeah. There's a related question. You were talking about inflation and deflation and stagflation. Heike Frost says, I feel like we've been in a tale of two cities for such a period now. There's such smart people on both sides of the inflation and deflation case. It's really hard to see which side is correct. Inflationists say buy precious metals and expect the dollar to weaken greatly with much higher prices. Deflationists say assets are topping. And although there's massive printing, it pales in contrast or in comparison to the huge deflationary drag on the economy. Would you say that a good bet would be to have physical precious metals but also hedge by having a nice size cash position just in case the deflationists are correct?
Well, I would just like to say deflation has been the dominant force for, 20 years or so. It's been since the tech bust. It's been a long time that there have been deflationary forces. Now, despite that, gold has risen during that time within those overpowering deflationary forces. And one thing that a lot of people don't realize is if we take the big deflation, which was the Great Depression, gold was held steady at that time. It was fixed, but gold shares had a huge rise that lasted right all the way through the Depression or a good part of it. And so people sometimes think gold can't rise in a deflation, and that's not true. It can. But to answer the question properly, ideally it would do better in an inflation. Granted, it's an inflation hedge. But if we get deflation, or say stagflation, which is slow, low growth with inflation, or if we just get outright deflation, gold could still go up.
Because in the end, gold is moves with economic uncertainty, and depending on the currencies as well. So that's its number one drive. And of course, a lot of people buying it that aren't just your investor. When your investor buys, of course, it's great. But when you see the central banks buying, you see hedge funds buying, like they're buying the second quarter of this year, billions of dollars in
Right.
the ETFs of gold. And so those are the big players, if you want to call them that, in this market. And so that demand is really strong. So the demand is very strong for the first time in quite a while, we might add, talking of this last few years. Yeah.
Yeah, we had another question on gold, and this was from Sound Money, Arizona. What are your thoughts about states starting to issue real gold as currency? We have a few of those in the United States.
Well, real gold as currency would be wonderful, but how would they do it? That's all. We've seen the strips of gold that look like a dollar bill, and it's very thin like a dollar, only it's like plastic, and it has a little bit of tiny gold in it, and it would have a value. But those things are very nice and very, and a lot of people talk about Bitcoin too. But yes, at one point we think that the currency market as we know it is going to have some sort of change. Just for the fact, I think that's going to be one of our big changes of the new normal. We don't know how it's going to turn out, but it's just that it's been a long time that no country wants a strong currency because they want to stay competitive. And there's so many products in the world. So that's always been the driving factor. Keep your currency kind of lowish, and so when the dollar was, that's why Trump was so upset with the strong dollar, because it really hurts your exports. And so that was always, but he was the first one to say that U.S. wants a weak dollar. No one really said that, and rightly so. But then on the other hand, it's a reserve currency, so they have the benefit of that, a great benefit that other countries don't have. So that is what I think other countries are trying to change. Is that why should we only depend on the U.S. dollar when we don't want to know if we can trust it? That trust is a big word.
And I think some states, as you mentioned, have already taken steps in that direction, and they could be the trendsetters and maybe, kind of like more and more states are starting to do things on their own, and not waiting for, a national decree or anything like that.
Yeah, and that's how things start. It starts like a little bit, a couple of states, it happens, people are enjoying it in their state, they're trusting it, it's feeling good, and it spills over to another state. So it could happen. It could happen, and if it happens, it's going to be, oh, wow, here we have this is great. Like it's kind of like the pot industry, and all of a sudden there it is, and it's a business, and everyone thinks it's great, where before it was not. And so something like that, it could happen very much, especially in these times, in these coming years.
You mentioned Bitcoin in passing, and this is a related question to gold, and that Slap J. Nog says, explain how precious metals could be reestablished as a price discovery or trust layer in an advancing digital age. There's certainly been examples where people have talked about blockchain-based digital forms of transactions that could be somehow backed up by precious metals, that kind of thing. But we've also talked with like J.B. Tucker from Casey Research, and he's talked about how gold is a truth serum in that, as you were saying, when people are losing trust in the currency or they're losing trust in the markets, that kind of thing, it exposes itself because Gold is the tell. You can look at what's happening with gold. So do you see a role in the future electronic transaction era for precious metals related to that?
Well, that's a fascinating thought, because it certainly wants to make sense, because a lot of people are going towards that. Our generation aren't used to that. It sounds so uncertain, like you're going to get locked in that chain. But I think once everyone feels comfortable with it, which we don't yet, even though we appreciate it, but we see the young people really liking it, and so we certainly are keeping an open mind to it, and to have a gold back would certainly ease the fear of everyone thinking, "Oh, am I going to get my money out of that?"
Right.
And so maybe you have to keep your mind open for the future, because the currency market's never been so uncertain in this time. And this is kind of breaking it apart, the pandemic. Not breaking it apart, but changing it. And everyone's seeing for what it is, more clearly than ever before. And that makes a difference. This is what we see.
Okay. And we have another question from the Slapnog. He or she is asking, will manipulation in the precious metals market end now that Warren Buffett has bought Barrick Gold?
I know. We were just talking about that this morning. Yeah, that's like that is really one of the proof of the pudding. He's never liked gold, ever. We've always heard him, as everyone knows, he just thinks it's not necessary. For him to buy Barrick Gold is interesting. And my son was just telling me this morning when we were talking about it, he was saying, Warren Buffett's father was trading gold shares, and he made a lot of money in gold shares. We go, oh, I didn't realize that. And I thought, oh, that's interesting. I'm going to look it up. but the interesting, so he does understand gold shares. I'm sure he does it very well. And Barrick Gold, he's staying in the U.S., staying in North America.
But to answer the question, I don't think that will stop manipulation. I think, the manipulators are always going to be trying to manipulate, and they do, and they can only do it for so long or do so much before the major trend takes over and drives the price wherever it's going. And so a lot of people worry about the manipulators, but they're more like kind of short-term noise, and they're not to be given that much, I think, like importance
over the time.
Yeah.
But we've been hearing about manipulators since the 70s. It's always been those horrible manipulators, whoever they may be. So, we've been hearing about them for years. And so we kind of take them with a grain of salt. So,
but they're real.
Yeah, they're real. And it moves the market. It's part of the volatility, in fact.
Yeah.
And so, yeah. So we just, if it doesn't break any trends that we're following closely, and we realize there's a lot of volatility to be had, like especially saying gold and silver right now, because they rose so much. This volatility so far since that we've had up until the peak just recently is normal, and it's still like a topping process, and perhaps it's going to keep going straight up, but for us it's time to rest a while. It's had a good run, and so we're looking at the possibility of having it come down over the next coming months, and if it does, definitely take advantage of it.
One of the things that has also gone up as the spot price has gone up is premiums because of limited availability. Again, it's partly COVID related, it's partly just supply and demand dynamics, and those two are kind of accentuating each other, because as more people are getting concerned and they're scrambling for physical precious metals, the supply is constrained because the mints and the refiners and the mines have all been affected and shutting down partially, and that's going to be going on in case of the U.S. Mint for some time. Specifically with American Eagles are one of the highest priced because of a premium on those because of limited availability right now. Sean asked, with spot prices so high on American Eagles, does it make sense for the little investor to buy them, or should we purchase lesser known bullion?
Well, that's a good one, because as long as it's a bullion coin that's recognized by where it's made, like say the maple leaf in Canada, of course, and
Krugerrands.
Yeah, Krugerrands, of course, and all the known gold coins that are 99.9 are perfectly fine. I would definitely buy another one. and not pay the price of a premium. Wait for the premium to come down. It will come down. And it's right now up because the price went up so much. And people want the physical, and there's only a limited supply of them. So it makes sense that the premium's high now, but it will come down. And if we have a good size correction, then buy your Eagles and buy another one.
But we may have premiums for looking out into the future because of the dwindling supply. And again, they'll come down, but they may not ever come way down. So I think we may have to kind of live with premiums more so than, say, what they were a year ago.
Mm-hmm.
Okay.
So,
We have another question from Keystone Stacker. Imagine a young family you care about who's just starting out in the world with a total yearly earnings of, say, $100,000. What advice would you give to that young family to save for their financial future in the year 2020 and beyond?
to buy gold and silver.
My daughter asked me that same question.
That's great.
Yeah, she's one of those. In fact, opening account, you can go with ETFs and physical gold, like you said, with the premium. But like right now with it so high, we would just like get your feet wet and get in them if you're not in them yet, just to be in them, and silver too. But also know there's going to be a correction probably coming up.
And then you buy a little more maybe next month, a couple months, kind of average in.
And hold them. Just hold them. Hold them for several years. And they're, if you have them in your house, they're pretty to look at. Just keep them safe. And yes, definitely, because we like to say buy the stock market, but at this high level and at this uncertainty, while we could still probably see higher levels, it's kind of a wait and see. As far
No,
as
I would say no.
Yeah.
Because I think it's just way so overstretched, and I think it is really high risk, especially compared to the metal sector.
Oh, we do have a really nice chart showing the mega trends between the Dow Jones Industrials and the gold price going way back.
And bonds.
Well, and bonds too, and also other.
Yeah.
I was just using that for the example. And it's for the first time, the mega trend, that's not just a major trend, is turning in gold's favor. And it has a lot of room to go. And it means that gold's going to outperform the stock market and the bond market.
For years.
Yeah, this is like a mega trend. And so that doesn't happen. We can count the times it's done that in the 50 years.
Very rare. It's like when that does change, it's it is mega. It means it's going to last for years. And there's some people that just trade on that alone and do nothing else for the rest of their life. And when it gets really, extreme one way, they will just buy gold and no stocks. And until that kind of hits the other extreme, then they get rid of the gold. And then that's the time that stocks are very cheap.
Yeah, and you'd be doing it about like once every 15 years.
Yeah, this changes maybe once every 10, 15 years. So you really don't have to worry too much about. But you do buy when it's at a good value. And right now it's telling us gold is the value and stocks are overpriced.
And it doesn't mean that one's going to go down, the other one's going to go up. It just means that gold will outperform.
It's a better investment.
It's a better investment. And for bonds as well. And so that doesn't happen very often. It's happening now. It's been happening this year, actually.
Yeah.
Mm-hmm. It's been wanting to happen. It's been bottoming, but now it's confirmed. It's confirmed. So that's a mega trend. So for a young person, even for an old person, we think that gold is great, and at least for the next 5 years, say 3 to 5 years.
Very insightful. Thank you very much, Pam and Mary Anne Aden, as the founders of the Aden Forecast. Your insight in this is highly appreciated by us and by our viewers and subscribers.
Thank you
so much.
So thank you for joining us again.
Okay,
It's
it's our pleasure.
It's a real pleasure. Thank you very much.
Take care. If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.